market chat. I really do appreciate those of you that call in live. And I appreciate your time giving us a few minutes. So we're going to go through all of our normal stuff today, but I'm going to preface it with what I think everybody already knows and what everybody is already thinking, which is that it really doesn't matter what the news is or what the fundamentals are, because it all changes at 11 o'clock when we get the USDA's report. And I think just saying that is important, but I think it's also important to realize that after a day or two, or maybe three, it could be after 15 minutes, the market is gonna go back and start trading real fundamentals again, and it's going to digest the information that we got out of the report, and it's going to start digesting it in context of the fundamentals. So I think that the most important thing that's out there today are these forecasts, right? In the next 2.5 weeks, 3 weeks, we're going to pollinate a huge portion of the crop. We're going to the need for moisture is increasing every day, and those of you that have been following the news know that there's really a tale of two crops that are being grown. So if you take the United States and you kind of draw a line across Iowa and you just make it a nice diagonal, you've got extreme dryness to the north and you've got extreme moisture to the south. And so you've really got two sets of crops. And one of the things that's going to be really important today during this report is we're going to get the acreage number, but then next, the algorithms and the traders are going to start reading where the extra acres came from, because it's going to give us a by county breakdown. And if all the acres come from Iowa and Illinois and Indiana, that would be a true shock, and that's really great soil, and that would probably lean to be really bearish, the market, if that's where 4 million more acres come from. But if they come from this area down in here and up in here where the weather's atrocious, I don't know how bearish that really is, because they're not going to have a solid set of crops. So I think it's going to be interesting to see a knee-jerk reaction and then a deeper digestion of the data as it comes out, and then it's going to start building in these forecasts, right? So in the next 5 days, there's no moisture in the plains. After that, there's a shot for 1.5 inches or so of rain in the 6 to 10 day, and then it goes back to dry again, right? And I'm not an agronomist. I'm definitely not a weather guy, so I'm only parroting what I'm reading, and I want to be very, very clear about that. Everybody's got weather people and all that stuff, and I can't do any more than restate what they have told me. But what I understand is that the corn crop needs more and more water every day as it gets into pollination. And when you have no subsurface moisture, nothing to draw from, you can only get it through irrigation or rain. And so this rain is absolutely critical, and is probably not enough to really help or bail this crop out completely. And of course, in the southeast, you've got flooding and you've got other issues. So the market's going to wrestle with those topics over the next several weeks. And then I think we're going to start wrestling with, freeze damage in Brazil. We have record cold temperatures there, and we have some issues down there. I have no idea if there's damage to that or not. I'm reading estimates of anywhere from 0 damage to 500 million bushels of damage, which would be truly significant, because that would push more pressure on our exports, which clearly are already tight, right? So who knows what's going to happen with the Brazil numbers. Our crop is, I think everybody's got to focus right in here, because that's where we're the most critical. And then I think we kind of get through this weather supply issue and the weather markets and all those things. And then I think we turn back to demand. And I think we start trading the strong demand that we have against what the Fed's policies are. And I'm trying to get a deeper understanding of what the Fed has done recently. You can read articles that suggest that the Fed's actions 2 weeks ago were a surgical strike against higher commodity prices. And I don't know if that's true or not. Honestly, I don't know enough about the Fed's policies and how they might impact it, but that could be weighing on the market, and it definitely could explain some of the bearishness that the market seems to be seeing. The other thing that happened in the last week is the corn market got hit on Friday, right? This was Friday's day right here. So we had a nice reversal day. We were poised to go higher, and then we got hit here because the Supreme Court came out and ruled against the RFS, right? And the headline broke, and it was really nasty, and so we sold it off. Well, on Monday, people had read the opinion and recognized that the opinion literally didn't change anything, meant very little, and put that premium right back on. And then yesterday we start trading into the report, and so we've put corn right into a difficult spot, which is right in the bottom side of the range. Nobody's really comfortable. Bears aren't comfortable. Bulls aren't comfortable. Everybody's fearful of what might happen here in this corn market, and that's the market's job, is to put itself where most people have the chance of being the most wrong. And so we're going to just see what the data is and not get too wrapped up or emotional in any of this kind of banging back and forth that's going on here, because once we get the data, we'll know, and this market will respond to what we have. What we know is when you do the balance sheets, and we've beat this horse to death, right? What we know for a fact is that even if you increase acres 4 to 5 million and you have last year's yield of 172, you have the tightest balance sheet in history of corn. What we also know is that our weather is not perfect and really not conducive to an all-time record yield, which we would have to expand the carryout. So, I have no reservation in saying just be patient, hold, let the market digest its information, let the market do its thing, and then see what transpires. And don't fall for the noise of the Fed, the RFS, the Brazilian crop. That's all just noise that's designed to try and throw us off of our game. And that noise can't change the market fundamentals. When a headline hits, it's just the author's opinion. It's not fact. And when I've even noticed this in the last year preparing for these market chats. The number of solid articles that you find are far fewer than the number of just off the wall and uneducated articles that you can find. If you're scrolling Twitter or you're doing something else, you have to be very, very careful to choose sources that you trust and that you listen to. And of all of our sources, it's very clear to us that the risk is up in this market, not down. I think the worst case scenario is we get a big knee-jerk reaction, we blow out all these lows down here, and we freak everybody out, and then we pop right back up into this range until something more develops. I really am not afraid at all of a downward move, given the weather outlook and given everything else that's out there. So that's corn, and of course that's my opinion. The market can do what it wants, but eventually it's going to snap back in and start trading the reality of its situation. Now, we've talked a lot about beans too. They had this huge gamma squeeze that came on, and we just blew all the longs out of the market. We we absolutely bankrupted anybody that had big short put positions on. Now we've just kind of consolidated, and nobody has a clue what's really happening here. But if you look at the seasonality of the crush, this is the lowest time of year for the crush margin, and crush tends to slow down the most. And we're starting to come out of that where we're going to start grinding again. And nothing's changed in the fundamentals that would warrant much lower prices. So I think we just I think what we saw here was similar to what natural gas did in 2018 when it rallied and blew everybody up. And it took 4 or 5 weeks for that kink to work itself out and start to trade higher. So same with soybeans. I don't have any reservations saying we'll be patient. Let's listen to what the acres are, and go from there. You know, I read 2 really reputable sources on acreage, on this acreage issue over the last couple days, and one is saying we're going to have more bean acres and fewer corn acres, and the other is going to say we're going to have more corn and fewer bean. They have no idea what the USDA is going to say or how the trade is going to digest it. So I think you just got to be patient, and the market is baiting us to overtrade it. I really believe that that's what this is. It's, you've got to break out to a new high, then you crush everybody on this gamma squeeze, and now you've consolidated. So I think it's a market that you just want to be patient in, and you don't want to fall for an overtrade. I'd much rather buy a bigger extreme move or sell an extreme move higher than trade right from where we're at, because it's just too difficult of a spot and you can't predict what's going to happen with it. All right. So as we wrap up, I think the most important thing you can think about is the weekly chart. And I'm going to put our cloud on the weekly chart. I know we're kind of flirting with it on the daily, but when you look at this structure in this chart pattern, this is extremely bullish. You've got no weakness on this chart. You're well above the cloud. You've got tons of support. You're counting a wave 2. You're coming down into the buy territory and bull market support on your RSI, on your stochastics, on your force index, on all of your oscillators. So the weekly charts are set to turn higher. Even if they poke down into this 50% retracement mark, that is still a buy signal on the weekly chart. And what's significant, and I think everybody needs to be aware of it, is that if you measure from, if you try to point out projections and you measure from this high to this decline, and you put a reverse Fibonacci number on it and an extension multiple, it counts first target to $8, second target to $8.26, and the 3 sigma target is $10 a bushel on December corn. Versus the downside movement here is down to this, like, what, 61.8% retracement, or 50%, down to $5. So you've got maybe a 50-75 cent risk down into here to potentially make $5 a bushel. The risk is up in this market, not down. And recent kind of volatility aside, I think that's what it's telling you. Because in all honesty, what's a dollar range when you have a $5 move coming? It's really insignificant and meaningless. So soybeans have the same count and have the same set of issues. If I put the same decay indicator on here, I haven't even done this yet. You know, it counts to 18 as a secondary target, and it counts to $21 a bushel on your third target. Well above the cloud. We're in a very bullish wave pattern. I'm not reading any Elliotians that are suggesting we have a significant top in place. This is just a longer term pullback. So patience, patience, patience is what it's going to take to manage this risk in spreads. So it's all about corn. It's all about beans. Wheat's going to be a follower of both. and I think we'll learn a lot here this afternoon. So I'm not going to sit. I'm not going to bore you anymore with what's happening. I think the risk is way up in this market, and I think patience is the name of the day. I know I've said that 3 weeks in a row, and it sounds like a broken record, but I think this is exactly what the market is should do. Put fear in people, get them out, get them uncomfortable, shrink those positions. You know, the funds are in their smallest position that they've had in a year and a half. So they've gotten blown out. They didn't make near the money they thought they were going to make. And they've got all the dry powder in the world with expanded position sizes and limits to push this market really far, really fast in the coming weeks. And don't think for a second that they won't do it if they think we're going to have a carry out that's, you know, down in the 5% or 3 or 4% of stocks to use. All right, that is what I have for you this week. We will keep you posted on what the market does and what the report is. Stay tuned, and we will talk to you next week.